What's going on YouTube? My name is Dollar Mike, aka Michael Mitchell, and I'm back at it again with another video. And as you may or may not know, it is tax season, so let's get into this video, which is the do's and don'ts of your tax refunds. I'm gonna give you guys 5 do's and 5 don'ts of your tax refunds. So let's get right into the video with the first one. Let's go. So like most of my videos, I don't like wasting your time. This one is no different, so let's get into the first don't. The first don't is don't waste your money on material purchases. So that means don't go out and buy a new TV, a new game system, some new shoes, because generally speaking, those things are depreciating assets, and with depreciating assets, if you buy it now for $500 and you go and sell it in the future, you're probably not going to get $500 back or anything more than that. You'll probably end up getting less. So with a depreciating asset, you don't want to buy it, sell it later, and end up losing money on it unless you're really getting the value out of it. I can understand that, but most likely you're probably not. You're probably just going to sell it, get rid of it, or it just goes to waste. So don't spend money on material items unless you're taking care of all these other things on the list that I'm going to mention. But actually what you should do is invest that money in a broad index fund. An index fund is simply a group of stocks. It can be the S&P 500, which is 500 of the biggest stocks in the US right now. You invest in that, and that is an appreciating asset. Generally speaking, it's an appreciating asset. You put, for instance, $500 in there now, and in 3 or 4 years from now, it could be $600, $700, $2,000. Who knows? It depends on how the stock market goes. Obviously, the stock market isn't a 100% bet to get more money, but it is highly likely to give you more money. Especially putting in an index fund, it's highly likely to give you more money than it would with you going and buying an Xbox or a PlayStation or a new pair of Jordans, depending on which ones they are, or something else like that. So that's my first do and don't. Don't spend it on material items. Do invest your money. My second don't is to not go to the casino. Just because you have extra money doesn't mean you need to spend that extra money right away. Make sure you do pay your outstanding debts. So going to the casino, like I mentioned before, if you have the extra money, if you're paying your bills on time and you're doing all that good jazz, nothing wrong with splurging a little bit, but it's no reason to get that extra money and spend it on something when you have something else that's more important that you should take care of. So pay off those outstanding debts first. For instance, credit card debt, student loan debt, things like that, car debt, whatever, home, it doesn't really matter. Pay off those outstanding debts first, and then go and spend whatever you want with your money on that. So just makes more sense personally. But yeah, my third don't is don't go put all that money that you got from your tax refund into a checking account. That is a mistake. What you need to do is go put all that money you got from your tax refund into a high interest savings account. The reason for that is, generally speaking, most checking accounts from most bank accounts all across the US and probably outside the US as well don't give you any interest on your money. So that money sitting there is not making any money at all. For example, if you had $1,000 sitting in that high interest savings account, that $1,000 would add an extra $16 over 1 year, instead of you getting absolutely nothing if you had it sitting in a checking account. So that's just $1,000. If you had $10,000, that's an extra $160. If you had $100,000, that's an extra $1,060. You get what I'm saying? Whatever the point is, that's what it is. Whatever the percentage is, that's what you're getting over 1 year. My fourth don't is don't spend your money on an expensive vacation. Now, don't get me wrong. I think you should take a vacation because, people need vacations. People need time off of work. People need all that kind of stuff. But don't spend your money on an expensive vacation that you're using with your tax refund money, but instead spend your money on a cost-effective vacation and then take that vacation using credit card churning, which is essentially the idea that you open up a brand new credit card account, you spend the money that you were going to spend anyway, and you get the points, and those points allow you to go wherever you want to go, do whatever you want to do with the points, instead of spending it with the money that you actually worked hard to earn. With those free points, then you can kind of go everywhere. So for instance, an example is the American Express Gold Card right now. Currently they're offering about 50,000 points if you sign up using the card, and you spend $2,000 within the first 3 months. Now you may say, Mike, I'm not going to spend $2,000 on anything tomorrow or right now, and you might not. I don't really know your life. You might not. I don't really know your life. But the point is, over 3 months, some people probably spend $2,000 regularly. So all you have to do is put that $2,000 that you spend regularly on your credit card instead of putting it on your debit card or wherever else you put it, and boom, there you go. That's the free points right there. And that 50,000 points goes towards about 2 round-trip flights to anywhere in the US. So how can you really argue with that? You can't, right? Because it's free. So it's free. You're going to spend that money anyway. So now you're going to get a free trip out of spending money that you already spent. You can use that credit card to pay for your bills. Come on now. For the fifth one, don't spend your money on unneeded items and do invest in yourself. So what do I mean by this? I essentially mean don't go out to Starbucks, Dunkin' Donuts, anything like that and buy coffee every day like you might do. I don't know you, but some people do, and they do it every single day. Don't go and do that because you're spending $3 to $6 every single day on a cup of coffee, which adds up over time. But in fact, you should do is go out and buy a coffee maker. That way you're saving the money on buying the coffee, and you can do all the other stuff on the side, like getting the flavors and stuff you want, which I'm pretty sure is more cost effective than going out and spending about $4 to $5 a day on a cup of coffee. That's one thing you could do to invest in yourself. Another thing you could do to invest in yourself is with that tax refund, of course, you can go out and buy a course. So for instance, you want to learn how to, do photography or something. I have a camera in front of me, so that'd be pretty good to know. You also want to learn how to do Photoshop. You can go and learn courses on that on places like Udemy or Fiverr or something like that. Any of those type of websites, you would learn a new skill. Basically, you learn a new skill, and then once you master that skill, you can go and sell that skill to other people. So that means you can go and take pictures for people. You can go and edit photos and videos for people. And there you go. You just made money by essentially getting your tax refund back, spending about $20, $30 of it, because these courses aren't expensive, and boom, that's kind of it. So that's my last tip for this video, but I do want to mention that I'm getting my tax refund sometime this week, I think so. So make sure if you guys are doing your taxes, or you guys already got your tax refund, I don't know, but if you didn't, try out TurboTax, because with the code linked down below in the description, you're gonna get a free 20% off. So if you want to use TurboTax to do your taxes yourself, which I did for the first time this year, it was super simple. Use TurboTax. They're not paying me to say that, but you get 20% off, so why not? They gave me the code after I finished, so I'm just going to give the code to you guys. That's literally that. There is also a free option for it, so you don't have to pay anything. I just chose to pay because I had stocks and stuff to put in. So you have stocks and stuff to put in. You have like retirement accounts, investment accounts. You pay for your school loans, stuff like that. Then you're probably good on paying. You probably should get that 20% off and pay and go ahead and get that extra money back. But if you just have like basic W-2s, like you literally just work, like you're like 17, 18, you just worked at, Best Buy, Starbucks, or wherever you just work, then you use the free one. There you go. Free tax return. That's it. That's how you get your money back. You put the information in. It's super simple. I promise it's super simple. I did it in like an hour, but I had a lot of stuff to put in. So you can do it in a lot less. I would say like 20 minutes. So 20% off on TurboTax, link down in the description. Check that out. If you guys also don't know, I make videos, if you haven't seen my channel before, I make videos all about saving money, investing money, credit cards, investing, retirement, everything. Personal finance is the whole goal of the channel. So check out the channel if you haven't checked out the channel. If you like this video, hit it with a like button. If you didn't like it, dislike it. It is what it is. I understand. Drop a comment if you want to. Not a big deal. Doesn't matter. But I love to read them. I read them all. So that's that. That's kind of it. So thank you for watching this video. I'm out. Dollar Mike. Peace.